Hello, today is October 14th, 2017. My last call said this was a negative pattern and that unless we gapped up over Thursday's high, lower prices should print. And I said, according to someone else's work, if we gapped under this low that the top of this leg was in. I thought gapping up over this high was unlikely, but that's what happened. So the call's killed before the open, and that means no call. As I've said before, I can't post right before the market opens, so I say the night before what kills the call before the open. No call is no call. We close, it'll change. We have the same pattern here we had Thursday. We gapped up, hit some new highs, couldn't hold on to the highs, couldn't hold on to the lows, couldn't hold on to any of these highs. It's a negative pattern unless it's invalidated by gapping up and promptly taking out these highs. We have the same pattern we had Thursday. If we gap under this low, according to someone else's work, this leg's over. And because we have conflicting signals, I think a gap and a quick move out of Friday's range is quite likely. We have a drop into the close on Friday. Usually that carries through into Monday. We also have a wall into the close, and that usually gets reversed. So I'm expecting a high likelihood, but no certainty, but a high likelihood of a gap outside of Friday's range. If it's over here, we've overcome strong resistance. If it's under here, we'll go over why the rally should be over. During the day, MeJT gave a few signals. They've all been satisfied. Said that rally was false, gives us a target. Says this drop is false, gives us a target for the recovery, and that was hit. It's important to notice how these lines really stop the rally right on the dot. Every so often I get someone asking if we can have the software for a platform other than TradeStation. In particular, there is a demand for the software to be written for NinjaTrader, which is a free platform. The problem is the system is dependent upon real-time data, exact data, to get these points on the nose. NinjaTrader doesn't give the data as it prints. It kind of summarizes it once or twice a minute, and because of that, these figures aren't exact. Without the exact figures, the price target might be satisfied under TradeStation, but not satisfied under NinjaTrader, and that throws the whole system off. So even if we had software for NinjaTrader without a separate data feed, which is not free, the system would have some inconsistencies. Let's go over what happens, what has been happening while the market's been hitting new highs and being unable to hold on to them. I'm calling this churning at the top, but it needs to be confirmed by starting down. While the market's been hitting new highs, the breadth has been dropping. Industrials hit a new high Friday while transports dropped. Here's the daily chart. We have a cup with a handle sloping up. It's not supposed to be a healthy pattern, although I have seen it fail in the past. This leg, among other legs, can only be counted as a 3. There's no way to count it as a 5. This thing is overlapping and corrective. That means we're in a corrective wave of some sort. If blue C is a half times blue A, it would end at 25.57.37. The high was 25.57.65, which is close enough. So if that's a high, it's a plausible price. It's not the only way to count it. Just as there isn't just one way to count the waves, there isn't just one way to do DeMark's stuff. This was the date I liked for a high, so we called it number 13. of a combo sell. Bar 12 didn't obey all the rules, as someone else has pointed out to me, but it doesn't have to. But if you obey all the rules, this would be number 12, and we're still waiting for number 13. Bar 13 can finish early, so under that system, this would be bar 13 on Friday. That doesn't mean you can't have one more move up, overtaking this and closing over this high by a point or so. Make it 1/100th of a point to be bar 13 for real. But in any event, there are a number of ways to count this, all of which say we're overextended. You can work off the overextended condition by dropping, by consolidating over time, or by becoming even more overextended and making a 913.9. But if we reverse from this price, it's at least a plausible price. Well, here's our Gann fan line. There's the last high, one of the last highs before this leg, last high before the leg. 66 days, 66 points. There's your 1-by-1 line right at Friday's high. So we're at a critical juncture here. If we gap under this low and start dropping strongly, I would believe it. It to me would signal the end of the wave. But if we don't, if we gap up and take out these highs, a lot of resistance will have been overcome. And the market's overcome a lot of resistance and a lot of sell signals during the long rally it's had. So I view Monday's open and first hour as the moment of truth. Be aware that on Monday, I look for a pattern with an early low, a late high. It tends to have a positive spin to it, although it doesn't really have to. So if we are going to drop Monday, I would expect to see it early, meaning within the first hour of trading, preferably by gapping down sharply. If that doesn't happen, the bulls, the bears will likely have dropped the soap again, as my friend Bill Blount used to say. So we're looking for a moment of truth on Monday. Very likely a gap outside of this range, and if it's a strong one, I think it'll telegraph the next move. There's a good case for the move being down, but until it happens, we'll have to keep our powder dry, and that's today's call.